Oh brother, do I have quite the video for you all today.
There's a lot going on in the market. There's a lot of opportunity, which means we have a lot to talk about. But more specifically, I think there's three things we really need to dive into. I want to talk about the stats, facts, and figures, analysis, and price action for Tesla, ticker symbol TSLA, for Palantir, ticker symbol PLTR, and I even want to have a little bit of a chit chat of the current most popular ticker in the world of retail trading. I'm talking about Open Door Technologies, ticker symbol OPEN. But first, before we get to that, of course, go Birds. I hope by the time you're watching this, the Eagles are absolutely stomping on the Chiefs, but we'll see if that one plays out. All right, now, obviously, quickly back to the market. If you haven't already, don't forget to like, subscribe, turn on your notifications, all that good stuff. You know the script. And really, let's just roll the tape. I very much want to talk about Tesla, Palantir, and Open Door Technologies, but first you have to understand the context of the larger market. And guess what? Dingity ding ding ding, winner winner, chicken dinner, we hit another new all-time high. As the market closed on Friday, Nasdaq notches at record high, S&P 500 notches winning week as Fed decision looms. So the overall market, S&P 500 higher highs, higher lows, strong momentum, strong price action, call it what you want, but it is bullish. Year-to-date gain of 11.5%. Pretty much similar situation in the Nasdaq, higher highs, higher lows, new all-time high. Price momentum is clearly bullish and year-to-date gain of 14%. The small cap sector, pretty much the same thing. I should note that it hasn't hit a new all-time high yet. It's getting very close. It's within spitting distance, but overall the bulls are clearly in control. And just a little bit of a nod to crypto, not as strong. We're not at that high. The last time we made a high was in August, but from a technical perspective, inverse shoulder, head, shoulder, nice breakout. I would love to see this upcoming week taking out 117, 118,000, but year-to-date gain as I'm filming this is around 23.5%. If you've seen any of my videos, you know I like to stay away from gut feel. I'm a person who likes to trade and engage with the market based on stats, facts, and figures and measurable empirical data. Basically, I want to know the actual numbers rather than just, oh, this looks good or oh, this looks bad. So to really start that off, remember, I like to talk about seasonality. Is it the end all be all? God, no. But you should know what the seasonality is. And basically the final half or maybe even the final 1/3 based on the last 20 years worth of data in September is bearish. When you look at the last 5 years worth of data, you're going to realize that September is the most bearish month of the entire year. And heading into the next week, definitely a little bearish. If you look at the last 3 years, same thing, the month isn't so good. And the upcoming week also does favor the bears. Now, once again, this is not the end all be all, but this is how things have played out on the past 3, 5, and 20 years. History doesn't often repeat, but it does rhyme. So please remember that. But this particular upcoming week is 100% going to be decided by the Fed. On Wednesday, 2 p.m. Eastern, the 17th, we will be getting the result of the Federal Open Market Committee where they're going to decide what to do with interest rates. And then Jerome Powell will be speaking at 2:30. As I'm filming this, there is a 91% chance of a 25 bips rate cut, according to Polymarket. According to Kohrs, there's a 92% chance of a 25 bips rate cut. And according to the Fed Watch tool, there is a 93% chance of a 25 bips rate cut. As in, we're pretty sure we're getting a 25 bips rate cut. So the fact that the odds are already so high, you might be thinking, well, if we know this and we're pretty certain, what's really going to move the market? And the answer to that is going to be Jerome Powell's speech, the chairman of the Fed, and what he has to say, really any inklings that the market can hang on to for the remainder of this year. Fed debate turns to pace of cuts amid heavy Trump pressure. So basically the question is, what are the cuts going to be in October? What are the cuts going to be in December? Between now and the end of the year, there's basically a 75% chance that we will go from 4.25% down to 3.5, as in 75 bips in total. Now, all of a sudden, if the market sounds a little bit more dovish, or if the market, I should say, interprets Jerome Powell's commentary as dovish, you might see this 5% odds right here of 100 bips start to spike a bit more, and the market could really like it. However, all of a sudden, if he sounds a little bit more hawkish and we might only get 50 bips, this 20% chance might start to spike, and I doubt that the market's really going to like it. So obviously, that's kind of like the 10,000 foot view, but we could have a couple, I guess, interesting pieces of commentary related to what companies should be positively impacted by the fact that the Fed fund rate's coming down, which means interest rates are lower, which means money itself is cheaper. Well, one of those goes by the ticker TSLA. Remember, Tesla selling cars. Most people, when they buy cars, they're not going to be buying it with cash. Most people go get a loan. So this is very much, by definition, a interest rate sensitive company. So from the narrative perspective, that's going to be bullish for Tesla. From another narrative perspective, why Tesla's board wants to make it rain for Elon Musk. The board is doing everything in its power to retain their number one asset, Elon Musk. So two pieces of bullish positive narrative. And then when we look at the price action, obviously higher highs, higher lows, strong momentum, technical breakouts. And when we dive into the world of options, you're going to realize everyone and their brother is betting on $400 strike. That's a lot of long calls. That's a lot of positive delta. So that means I'm looking for this upside gap fill, the technical level at 401. And then if there's that follow through, I'm talking about 420. And obviously, if you've been watching the live streams, if you've been watching these update videos, you know that I've been putting my money where my mouth is. And I've been putting a lot of my money into Tesla. Got in on September 5th, still holding it, currently up $44,000, a eye-watering gain of 350%. And who knows? Obviously, I'm hoping for a gap up and a ripper, but obviously the exact opposite could happen. I just want to let you know that I'm not just talking the talk, I'm walking the walk. I put my money on the line. Initially, it was 12K. Obviously, that's grown quite heavily as this stock is just ripping and ripping and ripping. But I can tell you, I'm looking at 401, 420, and then ideally in October, I'm looking for 500. Will it happen? Won't it? I don't know. I'll tell you better in November, but this is exactly the follow through I am looking for. Now, switching gears a little bit, I want to get into Palantir, which really isn't an interest rate sensitive company, but from a technical perspective, a beautiful breakout. So what we've had is Palantir ripping, pulls back off the all-time high, about 3 weeks of accumulation, bull step back in, we put in this higher low, and then all of a sudden, I'm not seeing much stop it all the way to up here. So Palantir, from an options perspective, does need to get above 175. There is a little bit of gamma resistance there, but if it can get over this hump, we're talking 185, which once again is pretty much right at that all-time high. I am playing this one a little bit differently. As always, I want to be transparent with you guys. I do have calls on Palantir, but these are for a bit farther out. I'm playing them in October because I want this play to cook. Because if we go up, maybe pull back, higher low, I want to give this particular play an opportunity to breathe, because if we could get to 200 plus, well, these options are really going to play. But even if they don't, I'm already up 72%, so I'm obviously very happy with it. So yes, I'm bullish on Tesla. I am bullish on Palantir. I'm looking at the options. I'm looking at the price structure. I'm looking at the momentum, and it tells me the bulls are still in control. I have my money on the line for those two plays, but this third one, Open Door Technologies, I do not. I want to be transparent. I don't have a position. I'm not long, I'm not short, I don't have options, but you could argue that this right now is the most popular play in the world of retail trading. So when I say retail trading, I mean exactly that. In my humble opinion, and remember, I'm not your mom, do whatever you want with your money. This is not an investment. I know there's a lot of times that people conflate those two, because trading and investing, they happen in the same domain of the markets, but there could be nothing that's more opposite. Investing and trading should never get confused for the same two things. Investing, you have a multi-year outlook on fundamental growth and improvement of whatever company. Trading, you are basically, it's a shorter term thing, and that could still be multiple months or something like that. But just in general, you're attempting to get in at a low and specifically get out at a high, or get in at a high and get out at a low if you happen to be going short. So please do not confuse those two things. In my opinion, OPEN, Open Door Technologies, is not a quality investment, but it is clearly a phenomenal trade. Year to date, it is up 458%. That is something that cannot be argued with. But when something goes up that much, the first question is this a short squeeze? And the answer is yes, but kind of only a little. The most recent numbers as of Friday's market close for OPEN is a short interest of 25%. Short squeezes are not binary. It's not yes or no. It's kind of like, yeah, are there some shorts? Oh, of course. Well, they could get squeezed out. And if there's more shorts, we'll go higher. But if there's less shorts, yeah, it could go up, but maybe just not much. So 25%, that's a decent short interest. But just to give you a little bit of context, when GameStop was squeezing, it was more than 100%. At one point, it was up to 140%. So could this 165 million share short position get squeezed out? Yes, but really what you're seeing is referred to as a gamma squeeze. So OPEM is, well, I would argue, all the data suggests it's people going haywire in the options market. So let me take a second to explain what this means. You could see here that a lot of people had bought the $10 strike calls. They are long calls at $10. So remember, when it comes to the world of option trading, it is a single dealer market. When you buy a call, you're buying it from a market maker. You're not buying it from another trader. When you buy it from a market maker, they have to hedge out their books by buying the underlying to the degree of what the delta is, the percentage chance of that going in the money. Well, when they do that, it pushes it up ever so slightly. When it pushes it up ever so slightly, some other people get excited because of FOMO. So they start to buy more calls, which means that the market makers need to hedge out more, which pushes it up even higher. And then all of a sudden you have this positive feedback loop of people seeing it going up, they buy calls. Market makers, well, because we're in a negative gamma environment and you have such an astounding amount of bullish bets, I'm talking like 99 percentile things, well, it goes up even more, they buy more, pushes up more, people get more excited, they buy more, and you can see it's just on this loop higher and higher and higher. Does it last forever? No, because there's no such thing as infinite money, but it can last for quite a while, and that's pretty much exactly what we saw in AMC of June of 21, where in one day it went up 95%. It's just because the options market went so haywire, and it was this feedback loop of market makers hedging out their book, pushing it higher, more people getting excited, and you understand, it just goes higher and higher and higher. So that's more so of what we're seeing. To a certain degree, you could argue it's a little bit of a short squeeze. Obviously, these shorts are not happy, but really this is a phenomena that you're seeing play out in the world of options. So what does that mean for all of you? Whether you're trading or interested in trading it, well, I would say keep it simple, stupid. The old KISS methodology. Ride the trend as long as it exists. Even though I do not think this is a good investment, I fully admit it is a phenomenal trade. You can make money to the upside and you're going to be able to make money to the downside. If you are a trader, your goal should be able to get the meat of the move. Your goal should not be bottom ticking and top ticking. If you pull that off, it's more of luck than anything else. For you, as a trader, ride this as long as you can. And then when you think the trend is breaking down, whether that's based on highs and lows or a trend line or the RSI or the MACD or EMAs or SMAs, however you personally define trend, ride it as long as you can. If it breaks down, you take your money. And if it completely falters, okay, you're out of it. If it starts to come back up, you can always get in again. You do not need to hold on to this for just any arbitrary reason. Play the charts, play the price action. You can win as a bull, you can win as a bear. Bulls and bears eat in the market. It's the hogs that get slaughtered. So I need to reiterate this. I think this is a phenomenal trade in both directions. Right now, the bear direction has not played out. But as an investment, I have a lot of questions about the ideal fundamental growth of this company. The guy leading this on Twitter, Eric, whatever, I'm not a fan of him. If you look at his track record in Wall Street, it's nothing but failures. But however, I fully admit, just because your track record has been horrible doesn't mean that this one play can't be absolutely amazing. Sometimes we need to kind of separate those two things. So remember, ride the trend as long as it exists. If it starts to break down, take your money. Maybe go the opposite way. But this is coming from a person who I've sat through every single tick of GameStop playing out, of AMC, of Doge, of Shiba. I've sat through all this, and the people who rode the trend made the most money. The people who overstayed their welcome, well, those are the people who are still crying on the internet about it. So I just want to let you know a little bit of context for this particular play. Please separate investing from trading and also understand that, yeah, it's a little bit of a short squeeze. It's more so of a gamma squeeze, and pay attention to the options market, because as people roll into higher and higher in calls, yeah, this thing could still be putting some gas on the fire. But overall, I have no position there. I am crushing it on Tesla and Palantir. I'm looking for those to go higher. And with respect to the overall market, please pay attention to what's going on with Jerome Powell, the Fed, the FOMC meeting, and the Fed interest rates, because that's going to have a big impact this upcoming week. Last but not least, don't forget, go Birds. I hope they actually crush Mahomes. And also, if you haven't already, let me know what ticker you're currently paying attention to, because if I see enough comments about the same ticker, I'm more than happy to do a full analytical breakdown of what in the world's going on than that particular ticker where you might have a little bit of money. That's what I have for you. I hope you're crushing it in the market. I appreciate all the good vibes. I'll catch you in the next one. Peace.